Good afternoon, everyone. Jason here. Today is December 6th, and this is your aftermarket update. All right, so we had a very nice day here at the Oil Trading Group. It was one of the things we talked about as we were getting started here today is that we were expecting the market, which by the time we signed in this morning, it was 307 ticks from low to high. So that was already above our 10 and 20-day averages in terms of average daily range. And so as the market was rotational here this morning, we also knew that because of the markets being closed on Wednesday, that the crude oil inventory report would also be 30 minutes later today. And so as we were entering into the market, one of the things that we discussed was the fact that we were going to be a little bit cautious, because what we didn't want to do is have the market just whip us in and out with these high bars. And so if you look down here on the bottom of the chart, you can see that we added an average true range. This blue line represents 20 ticks. And so on these 3-minute bars, you can see how the average true range on these bars was hovering at or above the 20 tick range. And so with big, heavy bars like that, you want to be super careful. You can be in on the right direction and still get whipped around with your tighter stops. So again, that is one of the things that we were being cautious with today. And so as the market comes down here and begins to rally, has this little bit of a pullback, we were looking for a short pattern against one of our levels here, right? So we had our structure mid. And so one of the things that we were looking for is a short pattern that goes like this, right? And then we were looking to get short. So get a little bit of confirmation up here. And once the market rallies through and cannot close above this box. So what we do basically with our levels is we put a 10-tick range around the levels to say this is kind of the zone of influence for these support and resistance levels. And so market comes up, has a long reversal bar, can't close really above the structure mid. Market comes back up again, down, right? So it goes up, down, back up, which is right here into this structure mid, and then we look to get in short. We end up getting in short at 69, and then we are looking to hold on for this target all the way down here at around 52 to 53. But in actuality, we were trying to go just a little bit deeper than that because we added to our position. I'll show you that here in just a few minutes. But as the market begins to come down, excuse me, we looked for the market to get down through. Really, you had this kind of box here around this area where price action had been, that's what this blue horizontal line represents, is where price action had been stabilizing after the open. So if you look right here where this line start, this is the after the open time frame, and the horizontal line you could see was an area of interest. And again, if you draw 10 ticks on either side of that, you'll get the fact that the market is rotational in that area. Once we broke out of that area and kind of did this pattern, up, down, back, pull back, and then go. That was what we were looking for to get short. We ultimately were looking to add to the position down here around 9. And so the market comes up, comes back and forth, gives you a little bit of heat. And again, we get right down through, and then the market begins to flush. And then this is where we look to add to that position down here around the 09. And actually, we must have been in up around this area here. No, we could have been in here. Anyway, we got in at 69. Market then finally flushes down through it. And then you get all the way down here to this right around the inventory number, right down here to the structure target. Because of where I was in and where I averaged in at, that made my stop 30, my average in price at 51.38. And so we were looking to come down to 50.38. We got pretty close, actually. We got down here to 49. Market then rallies back up, comes back right after the inventory number, stops us out for a 120-tick CL trade that started with one lot of risk. And so I think that's an important thing to note here. We started with one lot of risk, and we had a 14-tick stop. So we ended up with a $140 stop and a $1,200 trade. You divide that $1,200 divided by $140, and that is about an 8.5, almost 9 to 1 reward to risk ratio. So it was a very good trade in here today. We had a very handsome trade there on the CL, and so it really was a very good trading day. I'm going to show you the OTG trade of the day like we always do. I'm going to show you where we get in. I'm going to show you the ad spot today I'm going to pixelate out the ES and the ES price ladder in the ES chart. And the reason I'm going to pixelate that out is just there was a lot of activity. We had a number of break-even trades on that market today, and so it gets a little bit confusing on what you're looking at. So I really want you to just focus in on that final. Maybe I won't pixelate it out. Anyway, I'll do it here in a minute, and I'll decide if I'm going to pixelate it out. The point is this. There was a number of trades that we took a couple of trades on the ES. We had a couple of really good trades that really paid very, very well, but I got stopped out of break even right before and one for a small loss. Like I think I ended up today 1240 on the CL and minus $38 on the ES. So I think that's kind of how it ended up on the day. But anyway, I'll figure that out as I go through the video. The point that I want to make to you here today, though, is that with the right levels and the right interpretation and the ability to carry those trades all the way to completion, we were able to get an 8.5 to 1 reward to risk trade under our belt here today. And really, you can do a lot wrong if you're right on 8.5 to 1 reward to risk trade. So anyway, having said all that, I'm going to let you watch the OTG CL trade of the day. 69 short again on the CL. Stop here will be, okay, I'm in at 69 short. Stop is 84. Stop is 84.